The U.S. got a GDP report this morning showing that the U.S. economic growth fell 0.9% in the second quarter, according to the Bureau of Economic Analysis. This number, though it could change with a revision, does show that the U.S. economy has now had 2 quarters of negative economic growth and has technically met the National Bureau of Economic Research's basic definition of a recession. Though it's very clear that we're in an unusual time period if you look at the labor market, which is strong in comparison to the inflation and that GDP number. Fed Chair Jay Powell, on the other hand, did say that while he doesn't think that the U.S. is currently in a recession, that he's going to take the first GDP reading with a grain of salt. And now let's move on to some M&A activity this morning. JetBlue is walking away a winner in the battle for the budget airliner Spirit. The deal was announced after Frontier, which had originally pursued Spirit, walked away from their deal. Executives at Spirit have voiced concerns around the regulatory approval with JetBlue's deal, as the purchase would create the fifth largest U.S. airline. In total, JetBlue shelled out $3.8 billion, meaning that Spirit shareholders would get $33.50 per share in cash, including $2.50 per share, so long as the Spirit shareholders approve the transaction. And despite regulatory uncertainty, JetBlue CEO Robin Hayes thinks that this deal is going to benefit both passengers and investors, though the future of the cheap Spirit airfare does remain in question. And now on the earnings front, following Meta's overall disappointing quarter, the company has gotten a slew of price target cuts. Over 20 firms have adjusted their price targets on the parent company of Facebook. And despite lowering the price target to $230 from $260, Stifel still has the name as a buy. Analysts summed up their thoughts on the stock by saying that the company could weather an advertising slowdown, though it's not fully immune to the impact. However, the change in executives, with Dave Weiner moving from chief financial officer to chief strategy officer and Susan Lee taking over as CFO, was what really concerned Stifel analysts. In fact, they said, and I quote, "We believe these management changes are the bigger negative compared to the results themselves." Now, only time will tell, and you can stick with the street for more.